So here is my supply and demand forex trading strategy that I use along with ICT Concepts. ICT Concepts is a very well-known strategy along with supply and demand forex strategy as well, and they basically both in a way complement each other, and this is the reason why I like to trade this strategy. To me, in my opinion, this is one of my favorite strategies. I believe it'll be effective for you. I'm about to show you how I trade in the markets, how I look for the trends, how I look for supply and demand zones, how I look for the fair value gaps or slash gaps, whatever you want to call it. And this is how I like to look for a good risk to reward ratio and know that this is a really good trading plan for me. So let's go ahead and get right into it. I'm going to show you how I trade this strategy. So here we have GBP USD, and one of the things that I love to do before I even look for any particular entries or analysis is I look for a particular trend. Okay, so if you know how the market moves in three ways, right? Higher high, right? Correct. Or lower highs, lower lows, right? So you got higher highs, higher lows, and lower highs and lower lows. And the third one is either ranging or consolidation. Okay, so those are the three things that you look for, right? If it's a downtrend, I'm looking for sells. If it's an uptrend, I am looking for buys. If it's a consolidation or range, I will wait until I see either a breakout to the upside or a breakout to the downside to see which direction the market wants to go. Okay, so that's the first thing that we need to look for. Okay, the second thing is you might see, high, low, continue up, right? And then it leaves you this demand zone down here after a breakout was formed, and it'll come back to this demand zone, and then you would think that it's selling, but in reality it's just retesting where it broke out from, and it's leaving you an order block or a gap per se. And then you'll take your entry right here. Once it starts to move bullish, your stop loss underneath here, and you just continue up to the highs. Okay, so that's where I tend to get in on my entries or look to trade if the trend is going up. Okay, it's the same thing as vice versa as the trend going down. So let's go ahead and look at example on GBP USD. Okay, now I have these things called session London, New York, Asian. So if you want to implement this indicator on your charts, I think it's very helpful for you to understand the session that you're trading. Right now, I trade only New York session. That could change due to job purposes, but here we have New York session. So I just go ahead and you can click that for New York, click this for London, click it for Asian. Of course, you can also change your colors either way you want to, just like this. You see. So that's how you do it, but let's just stick with New York right now, and we'll just look for a setup. All right, so let's go ahead and look for a good setup that I believe is pretty good. There is one over here I am looking at currently. All right, so let's go ahead and do a replay mode on this. Okay, so this is how I tend to look at my setups. Now I trade anywhere from 7:30 a.m. all the way to 10 a.m. or 10:30 a.m. Okay, so we already see that the market is forming higher highs and higher lows, right? First off, we got this big momentum, right? We have these big momentums, and this is already telling you that the market does not want to come back down. Okay, so you have the higher highs and higher lows, correct? All right, so let's go ahead and make this a little larger. Let's go ahead and zoom in, and let's go ahead and take off the sessions right here. So anytime you see a breakout from this high right here, which I'll go ahead and show you, this is showing you that this is a potential setup for continuation of buys. Okay, and like I said, guys, what did I say? This is starting from the trend of higher highs, higher lows. Boom, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so we are in a uptrend. All right, and since we are in an uptrend, we are staying in the uptrend until the market wants to tell us different. All right, now what I tend to do is I look for two things. All right, I used to just look for a order block, right, or a breaker block is what you call it. You can put your order block right here, or you can put it anywhere you want to on that demand zone. Okay, so I now tend to do it like this a little bit. All right, and the reason why I do it like this, because if you really think about it, this is all order block, area. Okay, and what is an order block? An order block is where if it's bullish order block, you look for a bearish candle and immediate engulfing bullish candle, and vice versa for a seller's order block. Okay, so wherever you see the most volume, that's where you want to draw up your demand zone. Okay, and that's obviously right there. Now technically I usually do it right here, which I have been doing from the group, but you could definitely put it as right here because this is where it exploded from. Okay, and you want to see a return. Or secondly, you can put it at the gap. Okay, so the market is leaving a gap in this area, and this is where the gap is. So the market could potentially bowl up and then come down to fill this gap area, and then push back up from rejection. And then that's when you enter right there and put your stop loss below here. And then you can trade it up to this high, or you can look back and see where there's liquidity that needs to be grabbed. Okay, so it's two of those things. So let's just see how we tend to do it. All right, so let's look on the 5 minute. All right, and you can do the 15 minute as well. Let's just actually start on the 15 minute. Let's just remain on the 15 minute. Okay, so the market will come down, and I tend to usually tend to trade the 5 minute time frame, but this works on all time frames, trust me. Okay, all right, and then once I see the market continuously going back up, if the market didn't come down to this gap or didn't come down anywhere in this area, then if the market proceeds to the high, then I would tend to wait for this high to be broken, and I'll do the same one. If the high was broken right here, then I'll put a demand zone right here, which that would be my B setup. But thank goodness it came down and filled this gap in this area, which is telling me that this is a clean trade. Okay, so once I see that rejection starting to happen, and if you want to look at the 5 minute on how it happened, you see how the 5 minute came down, it rejected, then it came down a little bit, filled this wick, and it started going back up. Then you could put your trade into place right here. The stop loss is a little big for this one, so I want to do it 34 pips. I actually put it just right below this candlestick when you see the bullish momentum, and you can aim for these highs, which is about a 30 pip move. Okay, so take profit hit. Okay, so that was easy enough said. Now let's just say if you missed this move. Okay, if you was to miss this move, then what you could do instead is, okay, the market broke above, I missed the move, what now? It broke this high. The same rule applies, guys. You don't want to do it when the market is at a supreme high, but because this is like what I call like a mid high, which means it's getting to its highs, then I believe you're safe in this area. Okay, so you can wait for the market to come back down and retest this area, right? Which it did, and there's no rejection from there. So I wouldn't really like take this entry just because there's a little candle wick. I wait for a bull candle to keep continuously going up, and of course that happened really fast. But in that time, if you look on a 5 minute time frame, it'll give you more confirmation. I'll wait for this candle to engulf this previous candle, which it did, and I'll enter on this candle. Okay, that'll be more like an 18 pip stop loss. And then of course you could put your take profit right here at this high, which will also be an 18 pip win. Okay, or you can just put it at least at 20. It should be good. Yep, it should win. So that's how I trade my supply and demand trading strategy. So there you have it, fam. That's how I trade in the markets on ICT Concepts, along with supply and demand trading forex strategy. If you like this video, please like and subscribe and click the notification bar so that way you can get alerts for when my YouTube channel are uploaded and released. And I hope I see you guys in the next video. Peace.